Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 15th of September. Bank of England to hold its fire, focus to fall on the minutes. Today the highlight will be the Bank of England policy meeting, where the bank is expected to take the sidelines via a unanimous vote following the aggressive package of easing measures it delivered in August. The Bank of England lowered the bank rate by 25 basis points to 0.25% and expanded the size of its asset purchase scheme. Perhaps most importantly, the MPC provided clear forward guidance on the rate path by indicating that if incoming data are broadly in line with the inflation report forecasts, then most members expect another rate cut this year. Considering that all these actions were triggered by sharp declines in the nation's PMIs for July and that the indices rebounded in August, it would be interesting to see whether the bank maintains its position that more action is likely. Although market pricing implied that another 15 basis points rate cut for this year was almost fully priced in immediately after the August meeting, it now suggests that expectations for such a move have started to diminish following the positive surprises in most UK data. Against this backdrop, the meeting minutes are likely to attract a lot of attention. We don't believe that the rebound in August's PMIs was enough to force the bank to abandon the prospect of another cut. Nevertheless, we expect policymakers to acknowledge that the data following the previous meeting have shown that the UK economy remains somewhat resilient so far, something that is likely to prove positive for the pound in our view. The key risk to this assessment may be that some members are not convinced by this data and still vote for a cut today. If so, this would be a surprise to market participants and could push the pound off the cliff. As for today's indicators, during the European day we get Eurozone's trade balance for July and the final CPI for August, though neither of these is usually a major market mover. From the UK we get retail sales for August. The forecast is for retail sales to have fallen 0.4% following July's 1.4% rise, something that would bring the yearly rate down as well. The TR Ipsos primary consumer sentiment index, which appears to be a reliable tracker of the yearly rate, slid somewhat in August, enhancing the case for retail sales to follow suit. Even though we could see a negative reaction in the pound at the time of the release, the currency's overall direction is likely to be determined by the Bank of England decision a few hours later. We get the August retail sales from the US as well. The forecast is for the headline figure to have declined marginally after staying flat in July. Meanwhile, the core rate, which excludes automobile sales, is expected to have risen slightly following last month's decline. Despite the mixed forecasts, both figures are expected to indicate that consumer demand remains soft overall for a second month in a row. Coming on top of the disappointing ISM PMIs and the slowdown of jobs growth in August, another lackluster set of economic data could lower even further the likelihood for a Fed rate hike in September and thereby hurt the dollar. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.